home in the valley, some want a house on a hill. Savings and loans lend the money to buy, they build your money as well. Put your money where it builds. At your savings and loans, put your money where it builds. America. At your savings and loans.
First Federal Saving and Loan is the largest saving institution in the state of Illinois. It's got over $1 billion in assets. It's the leading saving and loan that sets the tone for the rest of the savings and loans that will not give us money for our neighborhoods, okay? The saving and loan industry has got to take us seriously. We are not kidding around. It's a matter of life and death for our neighborhoods. We are through kidding around. This is war.
And this is a report on that war, the people against redlining. We'll check tonight on how the battle goes in several American cities. Your own neighborhood could be the next front line. I'm Bill Moyers. Since the 1930s, billions of dollars have been spent on housing programs in American cities. The housing gets worse, the middle class keeps moving out, the cities continue to disintegrate. There are many complex reasons for it, of course, but many people say one reason the spiral downward continues is a practice called redlining. Recently, it's come to public attention all over the country. 2 years ago, my colleague Howard Weinberg and I went to Chicago to produce the first national television program about redlining. We'll begin this evening with some of the highlights of that film, explaining what redlining is, how it works, and what some people are doing to fight it. This neighborhood is obsolete. The people who live here don't think so, but some of the banks and savings and loan associations do. They stopped lending money because they believe the community is deteriorating and the risk is too great. But without money to improve people's homes or to give them a chance to buy another, the decay speeds up and the fear becomes a self-fulfilling prophecy. In this and similar neighborhoods in Chicago, people accuse the savings and loan associations and the banks of redlining. Redlining means an entire geographic area can be declared unsuitable for conventional loans and mortgages. A red line, in effect, drawn like a noose around a neighborhood until, for want of good housing, the working and middle classes are driven to the suburbs, and the neighborhood is left to the very poor. A side effect of redlining is something called disinvestment. You probably haven't heard of that term before. I hadn't until I came here. Disinvestment is a process of collecting deposits in one neighborhood and investing them somewhere else. The lending agents say it's necessary to spread the risk, but it leaves a neighborhood like this shorn of capital and hope, gasping for its very life. The people who can afford to move on. And that's what the savings and loan associations would like to do. After they've helped to build up the suburbs and make them affluent and attractive, they want to move there too, or at least to open a suburban branch. Only then does an old neighborhood like this discover where its money has gone. But by then, it's too late. Gale Sincotta has lived in this South Austin house for the past 8 years and in the area for 22 years. She's seen her block change from white to black, and she's watched the conventional moneylenders flee with the middle class. But Gale Sincotta has no intention of moving. In Chicago, she is a key figure in a loose coalition of organizations fighting to preserve the stability of their inner-city neighborhood.
Well, this is one of the FHA abandoned homes that, you can see that you're going to be losing this one. We lost two down the block. We lost another 2 flat, a couple doors down from where I live, just like the one I live in.
Well, how does this happen?
The people buy the home think that it's a good home because it says FHA, government insured, but it only protects the money interest. So the people with lower down payment buy a home. It could be in bad shape, therefore you don't have enough money to keep it up. They lose their home, they lose their credit reference, we lose the home on the block, and the mortgage banker makes a lot of money. And the regular banker he couldn't care less. He just redlined the whole area. It doesn't do anything.
Is this whole block here FHA?
The whole community, all of it's FHA. It's no conventional money for either mortgages, rehabilitation loans on the business trips. You can't get business loans.
And Gale Sincotta believes that's why communities die. She's seen it happen in the neighborhood where she grew up, Garfield Park, where this once fashionable hotel stands like an oversized gravestone among decaying houses and apartments. Well, surely it died for reasons more than the indifference of savings and loan and the fact that a bank moved out.
The banks make a decision way ahead of time. They redline and cut off money to a community, and they make the thing happen. It's a longer process. It isn't like instantly overnight. They maybe make a decision 10, 15 years ago to slow down on how many loans they give, but they still take money in from the community, and then they move out. This used to be a savings and loan association. Now it's a funeral home. We're at 5300 West. Madison Street is the east and west dividing line in the city. We lost a big bank at Kedzie and Madison, 3200. We lost a bank at 4800 Madison. We lost a bank at 4000 Madison. We lost a savings and loan at 4200 Madison. We lost this one at 5300 Madison, and we don't have another one down Madison Street till you get to Oak Park.
Well,
So the whole
a funeral home is rather
symbolic.
Symbolic, isn't it?
Yes, right.
Without money for conventional mortgages and banks to provide it, a community is branded FHA. Only low-income families can qualify. They may get housing, but the fate of the neighborhood, as far as the moneylenders are concerned, is sealed.
This is almost all new. This was all empty land less than 20 years ago. These are all new one-family and two-family homes. The only difference in this neighborhood, this is no conventional money. It's all FHA, which is like insanity. It's a beautiful neighborhood, new homes. The whole area around here is new homes.
How does your neighborhood of Austin differ from what's happening in East Rogers Park?
Here you can see everything is FHA non-conventional. You can see the institutions that have physically moved. There it's the symptoms, the beginning.
What would you say to the people of East Rogers Park?
Fight like hell.
This is Clark Street in Rogers Park on Chicago's North Shore. On the corner, Rogers Park Savings and Loan. A block away, First Commercial Bank. Across the street, Mr. C.K. Restaurant. Both lending institutions denied the owner of the restaurant, Chris Carlos, the money he needed to remodel and open. Finally, he got a loan from a bank outside Rogers Park.
And I'm ordering a cheeseburger deluxe and a bowl of soup.
All right,
Inside the restaurant, I talked with a housewife who's co-chairman of the local Citizens Action Program, an accounting professor from Northwestern University, and a mother of 4 who went to 17 savings and loan associations in trying to get a mortgage on a home within East Rogers Park.
Eventually, 2 out of 17 did give us a mortgage on the house.
What did those who turned you down say?
Out of the rest of the group, one of them came out and said they weren't interested, and I had no objection because he came out, looked at the place, and said he didn't want to mortgage it. I have no fight with that particular savings and loan. The rest of them, the remaining 14, asked you first the standard questions. I told them that we had been homeowners, had owned and improved a home, that we had a good credit rating, the whole thing. And everything was going fine until they said, "Where is the house located?" And I told them, East Rogers Park. And they said, "We are not interested, period."
I had the same experience. I was asking for $20,000 on a building that I could sell today for $35,000. There doesn't appear to be any threat to the area in terms of continued stability. I think it was a policy.
A policy of not believing in Rogers Park.
And that's when I didn't know the term redlining.
Last summer, CAP demonstrated against Rogers Park Savings and Loan, in part because its president, J.N. Langworthy, was then also president of the Illinois Savings and Loan League. His son, Jim Langworthy, is vice president of Rogers Park Savings and Loan. What about the complaints that your father doesn't believe in the community, doesn't really think it has a future, and that he's simply written off Rogers Park?
Well, I hope that was just rhetoric to grab attention, because that is untrue. This institution has a substantial investment in Rogers Park. We can't live without Rogers Park. If the community goes down, we can't continue to exist that I see. He cares about Rogers Park a great deal because this is the community in which we operate. I think I probably spend more time here than I do at home. But On the other hand, you cannot make any loan that in good conscience you don't think is a good loan.
What percentage of the loans you make are made right here in Rogers Park?
We have not completely broken it all down. It would be a long job. I'd
But
have
could
to
you
say
estimate, say, over the
probably
last...
about 20% in general.
Does that mean that 80% of the loans you make go outside of the area?
The local community,
Yes.
you'd say that, yes.
How much of the money that goes outside of the local community is, in fact, deposits from the local
I'd
community?
say probably 80% of our deposits come from an area within 5 miles around our office.
Ridge Avenue is a dividing line in Rogers Park. To the east, new families are moving in, but old money is moving out. Low-income families, usually black, make moneylenders nervous. To them, such change equals lower property values, equals higher lending risk. John Cullen needed $3,000 to convert an existing front porch into an extra bedroom. Rogers Park Savings and Loan told him he could get a home improvement loan only if he remortgaged his house at a higher rate of interest.
I asked to see the president of the bank, who is J.N. Langworthy. He was not there. I was told that I could see his son, who was the vice president of the Savings and Loan Association. So his son came out, I talked to him, and he told me that they were not making home improvement loans in this area. I've had my mortgage with this savings and loan for 12 years. It's not a matter of economics. I've never been late on a payment in my life. I was sick to my stomach. I just couldn't believe it, that this man is operating a savings and loan association in this neighborhood, and that he doesn't feel that this neighborhood is worth being a community.
Do you feel this neighborhood is going down?
No, sir, not at all. I've heard people say that it is a changing neighborhood. I've lived here 35 years. I was born and raised in this neighborhood. I hear people say the word changing neighborhood, and that doesn't mean anything to me. I think a changing neighborhood can be good, and I think it is in this case.
Have you seen any changes?
Yes, but all for the better. I see different people moving into the neighborhood, and I like this. I think community can profit from different types of people being in a neighborhood.
You don't feel
threatened at all?
threatened?
No, sir.
You don't mind
Not
your
at
children growing up here?
No, not at all.
Martin and Marbury Realtors have an office in West Rogers Park that's headed by Vice President Saul Brownstein. He's privy to the attitudes of moneylenders who refuse to give mortgages on the older properties in East Rogers Park. Is there any doubt in your mind that redlining exists?
No question whatsoever that it exists. They themselves will use expressions such as East Rogers Park is going down the drain, and they don't wish to go down the drain with them.
If you reached over to that telephone and called a local bank or a savings institution that you know of and asked for a loan in East Rogers Park, what would be the result?
Hysterical laughter. They can justify
Don't they
it.
have a stake in the community?
Obviously not. Their stake in the community is only the dollars that are coming in. What stake would you say they have in the community? They might own the building that they're in, but other than that, they're not concerned financially with the community.
But if a community dies around them,
so they pick themselves up and move somewhere else, just like automobile dealers do.
inner city neighborhoods need all the help they can get in order to compete with the growing suburbs. The big moneylenders in America are backing suburbia. Not only do they follow the market, they help to make the market. The world's largest shopping center, Woodfield Mall, is still expanding in the far northwest suburb of Schaumburg, Illinois. As sure as housing developments will replace cornfields, the middle class will leave the inner city to move here. This is the new home office of First Federal of Schaumburg, still under construction, but sure of its future. It used to be known as Laramie Federal Savings and Loan. In order to move to Schaumburg, it had to agree to keep a branch at its old location in Austin, on Chicago's west side. It obtained permission for its move and name change from the Federal Home Loan Bank of Chicago, which regulates federally chartered savings and loan institutions. John Stipp is president of that agency. The vice president and counsel is Albion Fenderson. One thing that the community groups tell me that they want is disclosure. They want to know how much of a savings and loans company's investments are being made in that particular neighborhood.
The only deterrent as far as we here are concerned in the Federal Home Loan Bank and as agents for the Federal Home Loan Bank Board is that, number one, that associations are not required by law to make this disclosure. And secondly...
Would it hurt them if they were?
I don't know that it would. I don't know that it would. I don't know that it wouldn't. The only thing that I know is that neither the Federal Home Loan Bank Board nor this bank has the legal authority to require the institutions to do it. Now, I think you probably know that we have asked them on a purely voluntary basis to give us the information.
Are they willing to make disclosure?
They're willing to make disclosure as a group, but not on an individual association basis. And I would not expect associations ever to voluntarily, on an individual institutional basis, say we have so much deposits from this zip code area and we've made so many loans in here.
Now, what's your objection to that?
Because then some other association over here that happen to have more money or more loans in that same zip code could be held up as a great example of this one. And there would be pressures that there may be very many other reasons why this association didn't have as much of one or the other as this one. A good, valid reason.
I don't believe there's been any conscious decision in any given area to draw a line around it and to say that we just will not even consider a loan in that area.
You don't think there is something called redlining?
There's something called redlining, but it depends on your definition of redlining. If your definition is that you have made a judgment based on economic factors, on the normal factors of why you make a loan or you don't make a loan, and then you make an intelligent and sound decision on that, I would not call that redlining.
What is it that causes a neighborhood not to be premium?
Well, it would be the general character, credit character of the neighborhood itself. And over a period of very few years, an experienced loan officer will have a feel as to the probable ability of most people in that neighborhood to repay a loan commitment.
Isn't that redlining by another name?
You have to define the term redlining.
Gale Sincotta spurred the fight in Chicago against redlining and since has become the key organizer in a national campaign to arouse other people in other neighborhoods. She's with me in New York tonight. Have things in Chicago changed?
Well, yes, since I last talked to you, the City Council passed an ordinance saying that any institution wanting to be a depository of city funds would have to disclose and also would have to sign a non-redlining pledge. The state legislature has passed legislation, also disclosure, and an anti-redlining bill. I think the awareness is very apparent. We're starting to come in with